Okay, so what you want to do is you just go to the top arrow right here. It says Manage Chart Layouts, and then you want to create a new chart layout. So this is just a clean slate, and then right beside that you can the unnamed part, you can create your layout. So you want to click on that, and then you have several options to choose from. There's 3x2 or 4x2. So I have this one set, and what you want to do after that, I think it's probably easier if you create a template, but the template is pretty straightforward. What I want to do is just kind of delete the volume. I don't need volume there because I'm looking for the setup. And then if you have a membership, then you go here and you add in the Wolfe Wave. The current Wolfe Wave version is 1.3. And then after you include the Wolfe Wave, you want to add in a TTM squeeze. So I prefer using, well, it doesn't really matter. I'd probably just use this one right here, this Macit 0. And yeah, and that's pretty much it. And after you included that, you probably want to go ahead and save it as a template. So let's call it Wolfe Wave. Okay, and we don't need to remember the interval and the symbol. So after I created one template, now I go ahead and change all the time frames. So you can have the top as your lowest time frame or the highest time frame. So I'll maybe use this as the daily, or actually the maybe 3 minute. And then on the one on the right side of that, maybe use like a 5 minute. Here, use a 10 minute. And these are just, most of these time frames are just the ones that are available to me. But what I really pay attention to are the ones that are on my favorite time frames. So that's the 30 minute and the 78. And then you can put in a higher time frame, say the 195. And then finally, you can choose the daily or the 4 hour. What was that TTM squeeze indicator? It was called the Squeeze Pro Indicator by Macit 0. Right here. All right, so then once I've created the time frames, hopefully I can just go ahead and use the template that I created, which is called Wolfe Wave. And yeah, so it keeps the time frame consistent. And I think that's with after hours on, right? So let me, instead of using the futures, let's use Google. Oh, okay, so you can see that they're all not matching here, right? So I think I have to, yeah, make sure all the symbols are correct. Okay. And so now they're all linked to Google. So you got to go here and then select the symbol and the crosshair. And I can see that this is not with the after hours on because it's regular. So I gotta make sure that they're all extended. And the reason why we use extended is because we want all the data points to be considered in the Wolfe Wave analysis. Some people like to have them removed. So you can make another workspace specifically for the extended hours removed. But in my experience, extended hours on is the most valuable because garbage data is still data. So the daily down here doesn't need to have extended hours on, right? And I think this one needs to be on as well. And you can see that they're extended because they have the shaded regions when the markets are closed. Okay, So now, so I'm gonna now incorporate that template I made for all of these charts. And you can, if you want a little bit, if you have more real estate, let's say if I use F12 and then maybe add those Darvis box channels, they're also pretty valuable. It might help help you understand if something is in a potential breakout position or not when you're using it with the Wolfe waves. So let me just go here and then resave that template. So I'll pick this, save it as that Wolfe wave. And then just apply it again. Ooh, that's not the right one. Okay, so, and that's pretty much it. I think I need to add it here too. Yeah. So this is I guess in my opinion, this is like the ultimate day trading system. And of course, it's not 100% guarantee you're going to make money, but what is 100% is your ability to manage risk. So if you get caught on one of these days where the market pulls the rug underneath you, right? Because we assume holding over the weekend is very bullish. But when the market pulls the rug underneath you and you're trying to catch a falling knife and the position just doesn't goes against you, when they go against you, then you got to make sure that you're not going in and averaging down. Okay, that's the risk managing and the psychological component to trading, which is very important, because had you average down in the morning, then you're probably going to be underwater, because all it did was just decay the whole entire day. Okay, so yeah, once you create this workspace, you have your Wolfe waves, you have Darvis channels and your TTM squeezes, and everyone's familiar with the TTM squeeze cycles, like cycle 1, 2, and 3, as you're scaling out of your positions. And then you got Darvis channel breakout levels showing your upper and lower bound. And then when you have all those set up, then you can go ahead and save a copy. And it's just called the unnamed, so I gotta go ahead and rename it, and I'll just call it maybe the full Wolfe wave workspace. And then say after hours on, right? Because you might want to do this, might want to create another workspace with the after hours off. So that's full Wolfe wave workspace. And if I load that chart again, let's say I go ahead and maybe look at let's say I create loaded a new chart here, and I'm like, okay, well, I got a new chart, and let's just use like a basic analysis, use some of these other tools and indicators just to kind of give us a general idea of what the market is doing. And I want to go back to that workspace. Then what I would do is I would go here and load that chart using that name, full Wolfe wave workspace, and it brings me right back to all 8 charts. Valgar, were you live at all today? Yes, I was live at the last hour of the day because after the market dumped, there was nothing to do. Scalping 20% wasn't what I wanted to do when I'm already drawing down quite a bit. Okay, so then you would save that workspace and use this for scanning. So then you create your watch list on the right hand side, and then now what you do is you just go through each ticker one by one and look for your trade setups. So let's do one together. Okay, so the market sold off. So here let's look at Affirm holdings, and when we see Affirm holdings on the 10-minute and the 15-minute time frame and we blow it up, you can see that there's a Wolfe Wave trade setup. However, when you look at the risk and reward, you know, it's only 1.89%, which could be like a 100% return, right? If it opens up 1.89% tomorrow morning. But the risk and reward is not that great. We want something like 13% and 18%, like something bigger where we can act, where it's worth our while to take that risk, right? Because remember, you have a job, I have a job. I also get contracted by the government sometimes for work, and making easy money is hard to do, right? And when you want to mobilize and use that money in the markets, you want to make sure that the risk and reward is attractive enough. It makes sense. Like, okay, you know, I don't get these risk and rewards setups where I risk 1 to make 10 every day, and I wouldn't mind taking that, right? And these Wolfe Waves identify those setups for you so that it's clear to see what the risk and reward is. So that this trade setup is not something that's going to be giving you such great return on your investment. So you would pass, and then you skip through it, go through the next one. Okay, and you can see here some purple Ds and ideal trade setups with TTM squeezes, which you could entertain, right? But now you have an additional tool with the Wolfe Wave to help you identify risk and reward. So AMD has nothing, AMRS, it's got an ideal trade setup, but you know, lots of gaps. Amazon, so here's Amazon, and you can see that there's this 10-minute and 15-minute TTM squeeze. If we blow it up on the 15-minute time frame, you can see that the risk and reward is not that great. And if you don't know what I mean by reward, it's this green perforated line, the dotted line. That's your reward. So typically you want your risk and reward to be at least 5%, 5 to 10%. And if you go into the Wolfe Wave strategy and maybe check out this PowerPoint presentation, so this is a bullish Wolfe Wave, and you can see when the green line connects 1 and 4, that's your target projection. And when the target projection is projected out, the time and price meet at the apex. So you draw a vertical line up toward the green perforated line, and that's your time and that's your price. So you want to kind of position into contracts that are a little bit outside here, right? Just in case. Now, obviously taking any date inside here would be more risky, and probably best to open those positions at the end of the day, right? But if you're looking to capture this move, you know, this projection from the apex, wherever this price triggers, to here, that should be generally a big enough reward such that you're not only going to be making a probability of making money on 100% return, but there's a chance you can make 500, 600, 700% return, and that's how option traders trade, especially for directional. Okay, so when we go back to the workspace here, you see the projection from 1 to 4, it's sloping downwards, and when you measure the return from here to here, it's only giving you a puny 0.19%, which is really, really low. Okay, so you got to pass. We had a really good looking setup on Google. However, the only problem with that Wolfe wave was that it didn't have a triangulation shape to it. And it doesn't necessarily have to have it. It still works. I've seen it work when it doesn't have the this orange line here that's being represented as the apex, forming the apex. On Google, it was obtuse. It was opening it up, where this one is converging toward one point. So yeah, so if you keep on going through these charts here, you can look at ARK investment. Okay, so this one looks attractive on the, what time frame is it? 78-minute time frame, right? Look at that. And this is a possible trading setup. And when you zoom out and get the full form of the Wolfe wave, you can draw that vertical line from the apex to here, to the projected line, and that's giving you around $138 after October 20th. Okay, and so obviously, with that being said, then if this triggers long, then you can see a 30% move in ARK. Now, 30% moves in ARK does not happen in one day. So you're not gonna, when you get this type of risk and reward, you're not thinking that it's gonna make that move in one day, obviously, right? So there has to be some sort of trigger in between here and here. Now, this is not guaranteed to work, right? You got to remember that you still need to figure out what your risk, the amount of money you're going to put into this trade when it triggers a long entry. Okay, because there's nothing 100% guaranteed. And when you combine this knowledge with your ideal trade setup, like you probably want to see an ideal trade setup with it, then you can start to figure out how much risk you want to take in this particular trade setup going into maybe contracts that expire in the first week of November, right? Because price is just going to attempt to trend higher, and if it does make that move, then you've got a target here by October 20th. So you don't want to get any contracts between now and here, because those will be subjected to some pretty massive decay if it continues to chop. But if you get contracts a little bit outside of October 20th, then the decay will be lesser and probably more tolerable. And yeah, you got to go out of the money. So I'll just make sure I can see if anybody has any questions. If you have any questions, just ask. So just going through, so this is what I usually do. So we're starting to do, because it makes my job a lot easier. I don't have to watch everything, but I just go, I know, so we're all very familiar with TGITs and TGIFs. So because the market's not in a very good mood, none of the TGIFs, well, Tesla worked out, but the rest of them didn't work out. And we have an idea that, okay, you know, if the market is picking up and we're expecting the S&P and NASDAQ to move higher over the weekend, and I see a Wolfe Wave setup going into Friday, then maybe I'll take one, right? Or during Monday, Tuesday, Wednesday, Thursday, Friday, you can see some trade setups developing. But at the end of the day, what you want to do is just look for, you know, these Wolfe Waves. So Alibaba has a Wolfe Wave setup, and it's been in a major downtrend. And of course, one of these days it will bounce, but the risk and reward looks great. However, let's take a look at it closely here. So if I look at the risk and reward, this one kind of looks like the Google setup, right? Because you can see that 2 and 4 and 1 and 3, when they extend out, they're not forming an apex. So because it doesn't form an apex, this is a little bit less reliable. Still a valid setup, because setups are pretty much 50-50. But the Wolfe Wave instruction set, or the ideal Wolfe Wave, should have 2 and 4, the lines that connect 2 and 4 and 1 and 3, it should form an apex. Now, because this is not forming an apex and they move out into space, then I have to create an artificial apex connecting 2 with one of these levels of support. And let's just say here. And if that's the one I choose to be my level support right here, then the time here is October 8th, where I expect Alibaba to make a move up to 160, which is approximately 14% move. Now, you might think that's great, so let's take it. But you have to also realize there's no 78-minute TTM squeezes. We know that 78-minute TTM squeezes is required to get those big moves most of the time. Okay. So this is simply a setup, and if I were to, like, let's say I had a $5,000 account, and I wanted to take this trade, right, with really low risk, then obviously I would go for something that expires sometime after October 8th. So let's take a look at a contract together. So if we take a look at Alibaba, so monthly Octobers, and the target here is at 160. So maybe I'll pick 160 calls for 75 cents, just one for $78, right? So you have a $5,000 account or $2,000 account, and you're risking $78, maybe $100. So $100 for a $1,000 account is like 10%, which is still, you know, relatively speaking, $100 for a $1,000 account is really high, right? If we're talking in terms of percentages, but when we talk in terms of net liquid, it's really, really low, right? And every trader will have their entry barrier. So 1,000, it could be 2,000, whatever. So you have to kind of say, well, if it's so then when you go ahead and you use this ledger here, I've created this. Where's that ledger? So this one here called small accounts. So let's click on that. And if you type in like $2,000 with assuming a setup or a strategy that's giving you 62%, so you need to know what a 62% probability setup looks like. Okay, and then when you know what it looks like, then you're putting in $567 for a $2,000 account. Now, if you don't know, like, let's go back to this Alibaba. Now, this Alibaba has nice risk and reward, 15%. But the setup is not that clean. Like, you don't have a TTM squeeze. you have like an awkward looking Wolfe wave, but the risk and reward is good, and lots of gaps. So we don't have that high conviction. So you need to drop this 567 down to maybe like half or more than half, say maybe 80%. So 80% of that 567 to be exact would be $113. Okay, so you'd use 20%, right, of this amount, not the 80, not the full amount, not the 567, because that's 567 is representing a 62% probability. So you drop it down to about $113. Huh? And that is the amount that you would risk if you're taking a trade setup that looks like this. Okay, and that's what's gonna kind of protect you from getting into in trouble. Okay, that's the setup, and with position sizing. So you go to big. There's nothing here. And there's a lot of nice shortcut hotkeys here that you can use, like Control Alt Q, and then use the auto button to kind of position the scale properly. Go through Baidu. Going through BIB. And obviously you do also need to know the characteristics of the stock as well. So BKNG, there's no Wolfe waves, and they don't appear all the time, right? So if we just keep on going through this, if you have a fast enough computer, your computer system should be able to process all the data points. Okay, so there's Chipotle. Okay, so like you see, Chipotle has a setup. However, there's no, the risk and reward is quite low, and there's no TTM squeeze. However, there's a TTM squeeze coming in on a 10-minute and 5-minute, which will help you understand how long you should be in a trade if you're taking this trade, right? It's not going to be like holding it for 3 weeks. You're using these cycles here to help you manage your profit. Coin. So Coin here has a setup on the 70-minute time frame, and it's related to Bitcoin or cryptocurrencies. So when you expand this and see that there's a 70-minute TTM squeeze, you can see there's like a little gap here, and I don't know if there's any more gaps above it. But yeah, we have actually an interesting feature here called Customizable Gap Finder, which will help you identify all the gaps above and below. So there doesn't seem like there's any gaps below Coinbase. Just this one gap right here. And possibly make a move to 254. So when we expand out, you can see that the apex forms right here around November 1st. Okay, so we think the market should start picking up around that time. We draw a vertical line to this target to the projection line to 275. And yeah, you can see that there's a potential trade setup that could push Coinbase up 21%, but that would require you to hold that position or open up contracts that are past November 1st, because it's going to take the whole entire month to get there, right? Because it's going to trade choppy like all this. And that could take about 27 days, a whole month. Okay. Now for this setup, you might think that it's a high probability setup, which it might look like that's the case because it's got a lot of the ingredients that we look for. It's got a 78-minute TTM squeeze. It's got that Wolfe wave. It's got a target of 236, right? And then we got higher level targets up to 255. So this is great. I mean, you got great risk and reward, and then if you want to take that trade setup, then this is one that you'd want to position size into. But you're not going to position size into something like this using $113. Okay, so you'd have to think about what this setup looks like to you in terms of 62%. Does this look like a 62% probability setup to you? Is this something that you like? Is this something that you know how to trade? Have you seen before? Does it make sense to open up Coinbase at the end of the day today and then see it run up higher? And if I were to get something that fills that gap, do I really need to go out to November? Past November? So November 1st contracts for coin. And the target is what? 236, which is about a 2.63% move. Is not a big move, right? And then when I look at those contracts, they're like $4 or $5, right? So with this target here at 235, I probably have to move this red line, this time target, a little bit closer because it's just too expensive for such a small reward. Now if I'm going after this 275 target, then yeah, maybe I'll go for the monthly November contracts and then pick something like with a nice tight narrow bid and ask. So maybe the yeah, there we go, the 310 or the $300 calls for November 19th. Okay, because the bid and ask is $2. The bid is $2 and the ask is $2.15. And then you would figure out whether or not that 250 buying two. So you got to pick up two contracts, ideally, and that costs you $400. And if that $400, when you put it into here, that's pretty close to that 567. So you're saying that's probably around like a 58%, probably 55. Yeah, about like 53, 54%, a 54% chance that it could get there. All right. So then as soon as it moves up 100, you close off one and then see if the second one, which is now pretty much a freebie, makes it up to 275. And if that happens, then yeah, you're going to be you'll be up about, the contracts will go from $2 to $6. Okay, so let's keep on going through these charts together. So that's coin, CRM. So CRM, look at that. So we actually now implemented a bearish wave. But keep in mind this bearish wave, it did give a sell signal back here on last week on the daily, and lots of gaps. But this Wolfe wave is a little dirty because the lines that generate 1 and 3, 2 and 4, they're expanding outwards. They have to form an apex, right? So it's a little bit, I would say, that compromises a bit of the probability of success. So we're always kind of looking for 62%. That's kind of like your mindset when you trade. Well, everyone's thinking everything is going to work out 100% of the time, which means that you're going all in. But with option trading, because of the volatility, the decay, and all the dangers that's associated with it, because you're getting leveraged positions for dirt cheap, then you need to accept the fact that all the positions that you're looking for should be around 62%. Okay, so this one does not look like a 62%. Let's go ahead and move forward. So here's Crocs. Okay, and you can put on the gap finder on any time frame. CRVS, that was up a lot today and then did nothing. Still drawing down. Okay, here's another one, Crowd. Another similar setup to CRM, right? And if we evaluate the Wolfe wave, you can see that the Wolfe waves 2 and 4 and 1 and 3, they don't form that apex. Okay, so then the probability of success is a bit compromised. Does that look like a 62% probability of success to you? Probably not, right? So we define most of the trades here 62% because first of all, we have back-tested strategies that produce around 60 to 62%. We also have the strategy giving us great risk and reward, so we can take a couple of hits and still end up making money on it. But if you're not able to find something that looks like 62%, then you need to reduce the position size from 567, I'm talking about a $2,000 account here, down to 20%. So that would be $113, and that will keep you so in case if the market pulls a rug underneath you, then you're not going to be blowing up your account super fast. So I don't know, this crowd doesn't look like a 62% to me because there's no TTM squeeze. The ideal setup is not quite there. We got Dash, it's got nothing there. DDS. So DDS kind of made its move on the daily. Bearish Wolfe wave. Well, that was a pretty nice one. And you can see here that the apex, see, the apex formed here, which means that it was expected to meet this target at 175 in December, but here is a clear example that puts move faster than calls, and it actually reached that target a little bit higher than what it was projecting sooner than later on September 30th. Okay, so that apex, because we know that puts move faster than calls, it's not really necessary to buy puts that expire way out in the future, okay, unless you're dealing with a huge amount of money. But in this case, you can see that the trend is moving lower, and you can get that target a little quicker than 2 months, right? All right, so then that's and then buying puts, the position size on puts, it still follows the same type of mindset. Like you would still apply either a 62% approach, but if the setup is a bit compromised, meaning that it doesn't look right, then you could reduce the position size to something that is a little bit less than 62%. So going through Disney, Docs. Wow, Doximity has a whole bunch of Wolfe waves with gaps and all the bells and whistles. Now the only question here is, there's a gap here that's left open at $58, and also there's no 78-minute TTM squeeze, or there's actually no TTM squeeze other than this daily A6 that triggered. So if you're going to look for a bounce here, it's probably going to be on cycle 3 or 4, which is probably Thursday. DPZ, EA. Okay, there's the S&P futures. So here, the S&P futures on the 15-minute time frame, it's got a setup, right? Where it's given an entry here on the 15-minute time frame right here. And now when we evaluate the Wolfe wave, you can see that 2 and 4, lines 2 and 4, lines 1 and 3, they expand out. Okay, so this is still a setup. Setup doesn't mean 62%. Setup means that you've seen it before, and it's a roughly around 40 to maximum 62. Okay, and this is a trade that has a lot of the ingredients that we need, except for the fact that this Wolfe wave has no apex. So you would get into the trade, and then you know that on cycle 1 and 2 and 3 that you can look to take some profits, and then the target projection here is 4,361. But because it doesn't have an apex, we would create an apex for this one by finding some sort of level of support, like right here. So if we create this level support right here, then that's not going to work because the apex would be formed here, and the target would be expected to reach already the target, but it didn't. So we have to find another apex using this, maybe that one. No. Well, that's the only one. Okay, so that's maybe right there, because that's the top. So then that would get you around 4,378 by October 5th, 9:15 a.m. tomorrow morning. Okay, so that's a trade setup, and then you can put your stop loss right here, 4,258. Ethereum, Etsy. So Etsy, you can see there's a 30-minute time frame, and you can see there's just so many trades that you can easily put on. And that's another problem with these Wolfe waves, and also a problem in trading is that you can take on a lot of different look at that FANG stock. FANG off that A6. Jeez. Breaking all the rules there. Facebook, there's nothing there. Okay, Fastly, it's a 2-digit stock. Fubo, gold. We had a great one on Google, but that one collapsed on us. GS. Okay, let's see. Well, it looks like the miners are starting to pick up here, because you can see that there's the daily time frame Wolfe wave is kind of triggered, but these are pretty risky stuff. JP Morgan's got a bearish Wolfe wave. Okay, go out with earnings just around the corner. So the futures are up for NASDAQ. Yes, up a little bit. Novavax. So, Novavax took a pretty big hit, and it's got this Wolfe wave set up here, okay? And doesn't look bad in terms of its structure, right? And okay, time-wise, it's quite acceptable, October 21st, and the target would be 316. Didn't quite trigger the Wolfe wave because it's supposed to show WW there, and there's no 70-minute TTM squeeze, so then you would have to kind of figure out There's a couple TTM squeezes running off of the lower time frames, which you can use in conjunction with this 195 minute. And then if you turn on all your gap finders here, you can create some targets that you might be interested in taking profits at. So short-term target, obviously there's one at 205, and then there's another one here at 292, which would be like a top running into resistance. And then, you know, obviously sky's the limit on this. But yeah, these gaps do get filled and they can be used as targets. We use them a lot as targets. Okay, moving forward, NVIDIA pretty got hammered today. It's got a Wolfe wave, but look, the risk and reward is really low. OIH, no idea, but it's got a bearish Wolfe wave. OKTA, nothing there. Palantir, nothing there. Peloton has actually something there, right? So on the 15-minute time frame, it's got to move up to $88, and it's got a TTM squeeze in there. Daily candle-wise, it looks pretty nasty. It looks exactly like Roku, so it could kick. So these candles here, when it's red, it opens up the door for a kicker. So we'll see what happens on that one. PayPal also has a Wolfe wave with a move up to 265. QS got hammered. RBLX, it's got a bearish Wolfe wave, okay, but it closed actually green today. So look, it actually gave a Wolfe wave entry this morning right here, and then it's got a target here at $86, which is pretty interesting. So I'm just going through all of these to just check out. Here's our beloved Roku. So Roku's got nothing, right? It looks very similar to that Peloton, so it could do a kicker. Hopefully it does. And maybe I'm not looking at the right time frame. There might be a time frame that I'm missing that could be setting up for a move. Starbucks, Shopify's got nothing. Okay, so this is what I would do when you go through your charts, just to look for potential trade setups. Okay, and then what we also have available is the Wolfe wave alerts. So these things will also alert in the channel, and then you would just simply go, Tesla has a potential bearish Wolfe wave entry on the 78-minute with a 10 extended hours off. So if that's the case and I want to take a look at that, I would open up a new chart layout. I go to Tesla, go to 30-minute, open up the template, and then see if there's a Wolfe wave forming, which looks like it probably already formed in, what time was that alert? That was 10:24 a.m. So it was probably alerted right around here, and it's disappeared. So I have one low chart set up with after hours off. And then if I type in, say, Tesla again, let's see if there's any Wolfe waves that come up. No, nothing here. Okay, so that's pretty much it for the Wolfe Wave Workspace setup. It's a pretty straightforward way of finding quick trade setups that fit your time frame, or at least help you understand the time frame that you are going to be trading on. They are very powerful, especially when the market starts to work in our favor. Right now the market is in correction mode, so we have to be a little bit patient and not make sure our setups are pristine, clean, okay? And then also keep in mind your position sizing. Now, when you take bigger position size, make sure you take bigger position size when using profits, okay? And try not to use your initial, okay? Over the period of time since April, we're up quite a bit. Would have been up a lot more if we didn't have this nasty rug pull. But when you do position size larger than 62%, make sure you using profits and not your initial. Okay, so does anybody have any questions before we end? Let's see if there's any questions here. Okay. So after this correction is over, hopefully we pick up. Let's take a look at the radar and see what's going on here. Yeah, the futures are up a little bit, 0.15. It's kind of moving slowly toward that 6-day moving average like we saw on that Wolfe wave. VIX is down 0.14%, which is not really meaning anything at the moment. And hopefully we get a nice turnaround Tuesday. Let's take a look at some of the bid and ask radar here. Yeah, it looks like Tesla's up 70, is up in the ask at 782.25, so it's up about $1, close to $1. And then yeah, our Roku's are up $1. It's not, doesn't make a big difference. And then Google is catching up, so hopefully we can recover on those. It's trading at 2,684, so it's actually up. So we'll see if we get a turnaround Tuesday and just manage our risk and decide whether we want to hold those positions all the way into Wednesday. Okay, so thank you very much for your time. That is the Wolfe Wave Workspace introduction, and once the video is recorded and saved, I'll make it available to everybody on YouTube. Thank you very much and have a good evening.